How is loan term calculated? Loan term is generally calculated on one of the two things, either the WALE excluding options or the WALE including options. WALE stands for weighted average lease expiry. So on a single property, single tenancy, if it's a 2-year lease remaining, then the WALE is 2 years. On a larger property, we look at how long each tenant has left on their lease, we average that out, and that gives us the weighted average lease expiry. Now, some banks will consider options on top of the WALE to give you a longer term for your lease doc loan. So what that might mean, you're purchasing a property and it only has 12 months left on the lease. Some banks will just give you a 12-month facility, and at the end of the 12 months, they'd like to sit down and review the facility to make sure that the lease is still in place and you still service the debt. That does give you a little bit of risk in the event that that tenant leaves and it takes you a little bit longer than expected to find a new tenant. You might be in a tricky period with the bank where we're trying to manage to get a new tenant in or refinance that facility. If we're looking to use WALE plus options with one of the different lenders, in some instances, those lenders might be a little bit more conservative on the LVR, but we might be able to get a term up to 5 years, which means that if our WALE without options is 3 years, but with options is 2 years, if all of our leases end at the 3-year mark and nobody renews, as long as we keep making the repayments, the bank won't come knocking and asking for the property back. So in the event that you're looking for your next lease doc loan, make sure that you consider the term and not just the interest rate and the amount you can borrow.